Good morning, or I guess early afternoon for some people. It's 11:30 UTC, Friday, the 6th of November. Gosh, no, September. September. Anyways, we're about exactly 1 hour away from some pretty big market data from the US coming out. So we'll go through that. That's kind of a big deal here. Looking at Bitcoin in general, overall general view. We're seeing quite a bit of longs. I mean, even last early this morning, we were getting 3 to 1 long to short, 75% of retail trying to long. We have a bit of an upside move now, just like very low time frame, very, very local, nothing significant gained yet. So we're seeing that number come back down, but they're still like, 73% long. So it's not overly bullish at all because of that. Even on the taker side, we've got people just smashing the red button as far as taker volume. So it's still looking angling down where we've hit some key liquidity, which we'll go through. But for the time being, yeah, priority is definitely still down. We're actually parabolically down still, as I'll talk about. Local liquidations, right? We've had the little step off move. We've grabbed some local stuff. It's a little bit of a dead zone until we start getting it to 57K and potentially above. So realistically, I would want to see something achieved higher than what we did yesterday. Before we start trying to get the bull hats back on, some upside potential price movement. As people, like I said, they're still longing in the lows. We've still got a lot of stuff to test lower. And it's not until we really get down to 54K is when it thins out really heavily in the books, where there's just not a whole lot left to do down there. Looking at a bit of a higher time frame here as well. Yeah, like I said, still there until we get to about 54K, and so there is some local step offs that we could definitely target if that's a continuation move. So watch out for this. Like yesterday, we saw some pretty hard liquidations. We had a little higher low, pop back up, swing failed, broke back down, and then grab that long liquidations. Expect that to continue happening until we start actually gaining some upside priority, and the first achievement there is regaining 57K. And he closes above and then bullshit back testing local levels. Basically, the inverse of what we've been doing, which has been grindy down price action with grind down, nuke a little bit, go sideways, pop back up, swing fail, nuke again. It's basically just destroying the high leverage, low time frame traders, and everyone who's been short since we actually broke back below levels is just chilling at this point. So we're getting close to something as far as a potential reversal. We could go as low as 52K. I'd prefer 54, maybe 52K on a wick, but 54K seems like a good enough spot to look for a kind of higher low major bounce. But we're still closing dailies lower than we need to. So it's still priority down. On the funding rates, I usually don't talk about this, but it's important to note that funding rates are negative. So negative means longs are being incentivized, a positive being that shorts are being incentivized. So for the time being, yep, still a slightly negative funding rate, nothing massive to hold levels. So it's effectively like neutral bullish, not really that effective because that's such a small percentage, it's not offsetting trade fees. On the economic calendar side for today, big thing, in 56 minutes, it's going to be huge. Big ones look for non-farm payrolls, unemployment rate. This is going to set the tone. The expectation is that unemployment's probably going to rise. And if it does start rising, then the rate cuts, I think, on September 18th are kind of locked in that we're going to be getting a 50 basis points decrease. At least that's my kind of expectation as they do a massive decrease because it's already screwed, right? We've already got an uninverted, the 10-2 uninverted scale's already reinverted. I did a big Twitter post on it yesterday, or maybe it was, yeah, yesterday. And it just, the overall like recession is coming, like the sentiment is there, but that doesn't mean the markets have to crash. That means it's likely we get some kind of crazy melt up until the whole Ponzi rolls over. But for the time being, it's still, downside trending price action as TradFi is also nuking a bit. Looking over at, let's see, trading light. So trading light, we do have some longs stepping in. So longs building under local price action. This is still looking pretty decent. So if we do another move down, again, when we've had these kind of longs build up, we get a little pop back to the upside before we start failing again. The only issue is from the nuke down that we did earlier this morning, we actually have been seeing pretty big amounts of open interest increasing. So that's not always positive. As we saw in the long short ratios, that means retail is longing this low, expecting this to be it. If we do grind back down, like I said, We could go sub to 54K. Watch these things get pulled. These don't look like natural orders. It looks kind of fake in my mind. So I'd expect if we start failing locally to go back lower, they're going to pull those longs, and we're going to continue down until we finally find a local bottom. Likely somewhere around 54K. Plunge protection is stepping in really hard though, so it doesn't look like they want us to make a new low. This looks like hold the line type of price action below us at 51.6 and lower. For the time being, yeah, we had some big longs liquidated in this kind of downside move. If we look at the footprint, there we go. So where the orders are, still have downside priority. There's quite a bit of shorts. The deltas are all bearish on the 4 hour. So again, lots of aggressive downside moves. Now, regaining something above us, like even the first thing would be trying to get back above this local high, 56.5. Then we could start making the argument to come back up and test the highs at actually not even there, 57K, before we start potentially breaking stuff. But we want to get over this high. We want to create new highs from what we did yesterday to potentially give us some higher lows, some generate some kind of upside traction. But until that happens, we're basically melting down. Looking over at Trading View, just giving you a general direction on the overall liquidity, what we're targeting here. So we had that. I've talked about this earlier in the week. The 55.3 is the key liquidation level. We tagged it like within a couple of bucks, so that's actually awesome. That low leverage longs, those are all taken out at this point. There's nothing left to do now, except if we do start failing and going lower, you've got plenty of liquidity down to about 54K of lower leverage, like 20x and 10x longs. They're still in place. High leverage stuff starts getting hit around 57.1. So we could see that kind of pop back up into 57.5, 57.1. Again, if what we've been doing this whole move down is that we, grind to the downside, nuke a bit, pop back up, grab the high leverage daily liquidity, nuke, grab the daily liquidity, nuke. And that's been the consistent kind of structure here. Real key level here, if you're looking at it, is 58K. Closing above 58 starts to actually give us a potential upside move to grab the high leverage short liquidity that's in the 59K all the way up to 60 plus K zone, where we can then start targeting that stuff. But for now, you're melting to the downside. Turning all that jazz off and looking at the TA for the general area here. I'll zoom in. There we go. So general plan here is really simple. We're parabolically moving down. I'll show that in another chart here in a sec. So we're still kind of expecting the droopiness. The first flip starts to happen even here locally at 56.1. That's the daily open. If we start gaining the daily open back, we want to start targeting 57K. Once we start regaining, if we regain 57K, we want to see a very strong regain of move back up to 58.3, but we are parabolically moving down. So every level is still a short opportunity to go lower because as we saw, there's still liquidity. To kind of reinforce that, that's kind of like the general plan here. Over the weekend, I'm hoping for flats, dead, and sideways. I don't want any crazy stuff going on to give us some crazy gaps. Best case scenario is that actually if we do like kind of nuke down over the weekend and then we create a big CME gap for Monday, that we can actually get a chug move back to the upside. That's kind of optimal stuff. If we just kind of like slow dump it down lower after market hours and then give ourselves a CME gap to gain Monday morning. But for right now, it looks absolutely awful. So all shorts are safe until proven otherwise. It's been a wonderful like parabolic move down, and to kind of like show that like that's exactly what we're doing. We're parabolically moving down. You want to see parabolic breaks. So effectively just invert the chart. It's a parabolic move up, right? So if you do start failing levels and coming down and breaking stuff, that starts to fail the parabolic move and it opens up all of the short liquidity above us. But really, you need to get above key levels. You want to see closed above, what do we say, 57.1. You want to see 56.2. Like you need to start regaining levels. Until then, until there's any like micro regain, even at the weekly open, that'd be the first real significant gain to kind of break this parabolic move down. Until then, you see the direction of travel. We all do. So keep that in mind. Keep an eye on the major data that comes out in 50 minutes or so. And yeah, watch out for Friday volatility. Till then, take it easy, and I will catch you guys on Monday. Peace.